Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about USDJPY. First, I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they're moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support zone. From here, all these previous rejections to the upside were created. And right now, what we can see is that the market is testing again this exact same zone and has already started rejecting it to the upside. So in a situation like this, there is definitely the possibility of seeing more bullish price action being created away from this area, as already happened in the past when the market was testing and rejecting this exact same level. So on the monthly, everything looks quite bullish. Dropping down on the weekly time frame, what we can notice is a perfect inversion of trend. The market went from the creation of weekly lower lows and lower highs. We then had a triple bottom here created exactly at that support zone that we have previously identified on the monthly time frame. And now we have shifted here in the weekly as well to the creation of weekly higher highs and higher lows. So perfect inversion of trend from a weekly bearish market to now a weekly bullish market. Now, if we have to identify exactly the structured zone which the market has created and is currently respecting, we have to notice it exactly at this level. This was the previous support, turned resistance here and here, which now that the market has broken into the upside is now again acting as support across all this zone. The market has already started rejecting it to the upside, so more bullish price action could be expected away from this area. So essentially rejecting this previous resistance turned support. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Dropping down on the daily time frame, what do we see? Now, here in the daily, the situation is quite clear. I had spoken about USDJPY after the market essentially broken out above this level and explained all the reasons for which I was expecting the retest and continuation to the upside. And that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. That also came with a very interesting manipulation and essentially a stop loss hunt just below the previous low and then the rejection higher, which is a quite common stop hunting mechanism, because remember that in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. If there isn't enough liquidity in a specific moment in the market, what essentially market makers tend to do is push price below the previous low, trigger all those stop losses, which create essentially selling liquidity, which they can then use to buy. And at that point, the real push to the upside really starts. And that is exactly what happened here. So everything so far has been essentially happening as you would expect in a situation like this. We can also notice that right now, if we look here at the previous high, this level was previous resistance, which now that the market has broken it to the upside, is currently acting as support. We can also notice that since we have an impulse and a correction, if you want to measure the correction after the impulse, you have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.382 retracement lining up exactly at this previous resistance turn support. This creates confluence of demand and support exactly inside of this area, which increases the probability of seeing even more institutional longing, which at that point could push price higher. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what institutions in the market are doing on the JPY. Now we have to keep in mind that if we are looking at the data for the JPY, we're actually already looking at JPY USD, because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively decreased. We went from 179k net positions all the way down to 79k net positions. So essentially a 100k decrease in net positions, bringing the shorts on the JPY from an institutional perspective from 21k all the way up to 96k. And again, since all currencies are traded against the USD, if institutions are shorting the JPY, they are longing USDJPY. So institutions have been longing USDJPY, making it stronger. So it comes as no surprise that USDJPY has been in a strong uptrend. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, I wouldn't be surprised if this market would shift from an intraday bearish to bullish market to see a potential rejection to the upside away from this area, for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.